My name is Omoni Otone, the founder of Elite Accounting Professional Service. One of the reasons, why this institute was established is to bridge the gap between theories and practice. So, as a professional accountant, it's not enough for you to know the theory. You must be able to apply what you know. As people always say, your knowledge is nothing if you cannot apply it into the system. And so one of the reasons why we came on board with this is to equip professionals, to build professionals for excellence, to build professionals for world-class performance at their various places of work. Wherever you find yourself, you can stand. And that is why we have set up this training on tax. I've got a lot of feedbacks, a lot of comments from professional colleagues that we need to bring up a training like this on tax, because tax is a very, very wide profession, and we have a lot of people that has been asking, oh, how can I channel, or I can now start a career in tax and all of that. And that's one of the reasons why we decided to come up with this training. So this training has been holding for 3 weeks now. We've done it for the past 2 weeks. The first time we talked about the tax administration, the concept of withholding tax, VAT, personal income tax, capital gain tax, and also tax audit. And then last week, we talked about taxation for SME, tax planning, and also how to navigate FIRS tax promas. So if you are not here 2 weeks ago, if you are not here last week, please make sure you go back and listen to the video recording for last week. You can check our YouTube channel. You'll see the video for last week. So tonight, this evening, we'll be talking about a very interesting topic in taxation. And this is a topic that most accountants, most tax professionals, in fact, some consulting firms, these are things that they do. And when it's getting towards this period, you see most companies preparing their payroll. Why? Because payroll is a very, very important aspect for any company's operation. So we'll be looking at payroll management this evening, and we'll also be looking at how to manage contemporary issues in tax. And if there are questions, which I believe there will be questions. So if you have questions, please, as we always do, you can table down your question, drop them in the chat box, and after the class, we are going to take all questions. So tonight we are privileged to have one of the, I call him one of the greats in the industry. It's a privilege that we have Mr. Aziz Bidemi in the house this evening to take us on this training. Mr. Aziz Bidemi is my friend. I regard him a lot because if you are close to Mr. Aziz Bidemi, I tell you, you are rest assured that you have somebody you can always call at any time that, bro, so please, how can I go about this particular situation? How can I go about these things at my place of work? Mr. Bidemi is very, very experienced in the industry. And before I call on Mr. Aziz Bidemi, I would just like to read through some of his profile so that we can get to know our trainer for tonight's meeting. All right, so I will just quickly read through Mr. Aziz's profile. Please kindly confirm you can all see my screen while I read through his profile. Can you all see my screen, please?
Yes.
Okay, thank you. So this is just a brief.
Yes.
Okay.
See.
Okay, thank you very much.
Yeah,
so this is just a brief.
I can see the screen. Yeah.
Okay, thank you. So this is just a brief overview of Mr. Abidemi's profile. So Mr. Abidemi is a chartered accountant, and is a chartered accountant with strong background in accounting and extensive experience in preparing financial reports, financial analysis, and interpretation. His experience also spans across tax preparation and compliance, as well as auditing and ensuring entities compliant with relevant accounting standard, regulations, and internal control. Also, Mr. Abidemi is an enthusiastic professional with goals to impact knowledge with a special interest in teaching corporate and financial reporting, auditing, and assurance, with the ability to guide students to success. Having worked in different accounting roles, Mr. Abidemi helped SME with setting up their accounting system and also tax computation and remittance. Mr. Abidemi is currently the head of accounts at Sobic and Companies PLC and is charged with the responsibility of financial reporting, asset management, treasury management, tax, and also budgeting. Ladies and gentlemen, it's a great honor to have Mr. Bidemi Aziz in our midst tonight. Mr. Bidemi, can you hear me loud and clear, sir?
Yes, Mr. Money, I'm with you.
Okay, over to you, sir. I will hand over the floor to you now, sir. Go ahead, sir.
Oh, thank you very much. And good evening and happy Sunday to everyone. It's a great privilege to be with you all. One thing that is very important and that is very paramount is when you are with colleagues, particularly in our field, whether you are an FCA or an ACA, we all regard ourselves colleague. If you've been in the field for quite a while, I am telling you that you understand what I'm saying. My CEO is an FCA, and every time he calls me colleague. So I'm telling every one of you that I regard every one of you. It's a great privilege to be with you. Now, what we'll be doing this evening is just opening our minds to what is obtainable on the field. And it is, of course, an aspect of accounting, an aspect of taxation. And I must be honest with you that if you are not quite familiar with payroll management, with staff financing, whether you've been in the field for quite a while, you will never be open to it. And I want to tell you, at the end of today's lecture, training, go and upgrade your CV with a payroll management skills. And I promise you, at the end of today's training, you become a payroll officer. So it's peculiar to, people who are graduates that is with us. If you are correctly writing the institute exam, or if you are already a professional, like we are at ACA or FCA, it is also good to upgrade your skills because it is one of the units you'll be managing in any accounting department. We have treasury department, we have payroll, we have accounting, we have cash units, we have, what have you. So I would like to start because we have limited time and I want to open your eyes. I want you to also look at how to compute most of these things. Hopefully, if I speak with Mr. Money, would also share this Excel sheet with you so that you can, because most of small and medium enterprise, and in fact, some companies as well, they use, Excel. Though we have payroll software, some don't have it. But if you also, if you have a small company that you consult with, you can use this Excel sheet with them. All right, so we'll be looking at calculating payroll schedule. We'll also be looking at computation of PAYE, pay as you earn, and we'll also be looking at computation of pension. Then another thing that is also peculiar to what we do on the field, because you will see at the other side, you are inside. At the other side, also, people that will be coming from social contribution that has to do with a payroll. We are talking about industrial training fund. We are talking about the NHIS. We are talking about this pension. All of these people, they are also chartered accountants. All right. But I want you to know that there is something that we call profiling. Profiling. It is a key word. All of these institutes want to profile you to know whether any amount that is charged against your company, they want to know whether you can pay it. So that is why you see institutes, international, this NHIS, you see ITF, they will just bring any charge, any liability to you, all right? And they will tell you that, pay. But what they are trying to do is they are trying to profile you. So we are going to look at each of these things, one after the other, and what to do while you are trying to engage them. So before I forget, because what we are doing right here is the practical aspect. So everything that you will be, jotting down, their theory, then we look at practical afterwards. So let's start with PAYE, pay as you earn. We all know these things, all right? Pay as you earn is a system of tax collection where tax is deducted from the employee's salary at source by the employer and remitted to government. So now I will just summarize this whole thing. Then we'll move to the area of act. Now, we all know that PAYE is divided into two, all right? PAYE that has to do with the one deducted by your employer from your salary, and the other one that has to do with business owners. It is also all of these two, the PAYE deduction from salary and the PAYE computation paid by business owners, particularly business name registers. These two, they are guided by Personal Income Tax Act 2011 as amended. All right, so these two. Meanwhile, all of these, the ones that has to do with traders, business registers, and all of that, it's not so common because this Internal Revenue Service don't run after them. All right, so we'll be focusing more on the one that has to do with you and I, salary earners. All right, so can we please, Mr. Money, can you please scroll down? So we have how to calculate PAYE. We are going to see all of these things when we start calculation. All right, so the amount of PAYE that is deducted from an employee's salary is usually the following formula: taxable income minus personal allowance minus allowances, which is the tax rate, all right, that we have under PIT. Okay, so we have all of these things as a formula. I have prepared this Excel sheet that probably after the training, you are going to have it. They are going to practice with it. All right. So then how to register. Employers must register their employees with the FIRS before they can start deducting PAYE from their salaries. To register, employers must complete a form, each one, and submit it to the FIRS. Now, of course, we don't deal with this form per se. What we do is, once you at the beginning of a business, you register, you get a form, you register with Internal Revenue Service. After doing that, they generate TIN for you, particularly for your company. All right. Once they do that, then subsequently, each month, once you are having a new staff, you put them on your payroll, you compute your PAYE, then you remit the rest to them. So as time goes by, there may be variance of the amount you deducted from the staff, then the amount you remitted to the Internal Revenue Service. All right. So the amount may vary each month. What they see is last month you remitted 30,000 naira. This month you remitted 40,000 naira. The next month you remitted 35,000 naira. That's what they see. But what you will need to know is and do is that as month goes by, ensure that you archive staffs that you are employing and the staff that are resigning. Please ensure you do, because at the end of the month, they will come for tax audit. We have state like Ekiti state government, all right? They will always come at the end of each year to carry out a tax audit in your office. And when they come, what they'll be looking for is the staff that you claim that resigned, where is the resignation letter? The staff that you claim that you disengaged, bring out disengagement letter, and they will also want to see the handwritten and signature of that staff stating that original copy received by me. So those are the practical things that you need to know and ensure that your clients are keeping all of these things. So please scroll down. Okay, so let us start from this area. All right. I won't actually waste your time with all of these things. All right. So taxes on income and gains, personal income tax. The Schedule 6 of the Act states, give us the rates, and says PIT rate is applied on a graduated scale and taxable income bands are set out below. Where we have tax, all of these things you are quite familiar with it in the classroom. There is no problem with that, right? It's not a new thing. You are familiar with it. But what we are saying, what we are looking at right now is that you will need to know how to compute it in reality. All right. So then note that the minimum wage is 30,000 naira, less than 30,000 naira from employment are exempt from PIT. So let's go down, minimum tax. Then the Schedule 37, Section 37 of Schedule 6 states that every taxable person, excluding persons who earn the minimum wage or below, is liable to a minimum income tax of 1% of their gross income. This is triggered where actual tax payable after all reliefs and allowances is less than 1% of gross income. I remember a friend that called me some months ago, and he was trying to, the Internal Revenue Service located their company. It's not really a big company, it's a small company. And of course, whether you have one staff or two staffs or 5 or 10, you are obliged to remit PAYE insofar they are collecting salary. And he called me and he was trying to lament this and that. Before I forget, I want to tell you that whatever law that you can see under Peter, it's subjective to you. I'm sorry to say that. Now, why am I sorry? It's because I am being recorded. All right. Now, all of these things, the tax authority don't know the components that you are being keeping in your own company. They don't know. It is only you that know the amount. Hello, can you hear me? Hello?
Yes, I can hear you.
Yes, now.
All right, thank you. All right. So now, it is only you that know the components of the salary you are paying to a particular staff. And why am I saying this is because we reach gross income. All right. We have staff that we pay basic. Then we have other benefits, transport. we have housing, we have monitoring, we have others. All of these components that you are paying to your staff, the tax authority don't know it. So all tax is subject to you, and it is called self-assessment. All right. So take note that before any tax authority will come to your office, you yourself, you go and meet them and create a relationship with them. It is whatever you put forward that they will accept. So that is just by the way, because, well, I may forget, so I don't want to forget, so that when we get to the areas where you'll be seeing new social security contributions, then, because many of us are not quite familiar with all of this thing. So this is triggered where actual tax payable after all reliefs and allowances is less than 1% of gross income. So if the actual amount that is payable to Internal Revenue Service of a particular state, then the tax authority will not be collecting that less amount. They will be charging that person based on the minimum tax on the payee. All right. So please take note of that. So as we have in CIT, minimum tax, so also we have it under payee, pay as you earn, for salary earners. Please take note of that. So treatment of benefits in kind. Benefits in kind provided to an employee by the employer, such as official cars, accommodation, are deemed to be part of the employee's gross emoluments. For items other than accommodation, the deemed annual benefit is 5% of the cost, where the asset is owned by the employer or the actual rent paid, where the asset is leased by the employer. Now, all of those things are just English, all right? Now, the thing is, okay, the whole thing is this. If a staff is collecting 100,000 naira and other benefits in kind, even don't let us even go to benefits in kind. I have a staff that was on a salary scale of 80,000 naira. And now the housing allowance given to the person is roughly around 400,000 naira in Abuja. Now, though not 80,000 naira alone, because there are some other benefits attached to that 80,000 naira. Now, imagine if they now incorporated the housing to that payment. You will see that the cash flow that will be moving out of the 80,000 naira in which the person is receiving would be more. All right. So now for items other than accommodation, the deemed annual benefit is 5% of the cost, where the asset is owned. So the only thing they are charging 5% on is other benefit, other assets, not accommodation. So that is why I am saying this to you as a professional. Always have it in mind when you are engaged with your clients. Ensure that the areas where they need to search you out, you first of all carry yourself, speak with your director or your CEO, prepare your books and engage them first. Then we have taxable income, business income. PAYE is applicable on the business income earned by individuals, partnership, trust, and other. If you look at, like Mr. Money now, he is the founder of Elite Accounting Professional, but I doubt whether he is paying tax. All right. Now, so to say, my guy. Now, the thing is this: many of the small businesses that we have out there, many don't pay tax. And it's not limited to, payment of tax is not limited to companies. It's not limited to these companies, business names that we have. It's not limited to that. All right. So, but you know, in Nigeria, anything goes. All right, anything goes. So taxable income can be charged on business owners. On business owners. So, and it is covered by Peter. In addition, the FA 2020 amends Peter to provide that income earned by non-resident individuals, executors, and trustees from technical professional management or consultancy services remotely provided to a person resident in Nigeria shall be subject to a final 10% withholding tax in Nigeria. So please take note of that. Can you please scroll down? Scroll down, scroll down, scroll down. I don't want to rush through the. Thank you. Now, so we have all of these reliefs. So these are reliefs and allowable deductions that we have under computation of PAYE. We have CRA. You all know this. We are going to look at it. Instead of me going through this explanation, I will give you the Excel sheet. All right. So CRA, higher of 200,000 naira and 1% of gross income plus 20% of gross income. Then we have deductions allowed. We have NHF contribution, National Health Insurance Scheme, Life Assurance Premium, Pension Scheme, and gratuities. We have reimbursement as well. We have this reimbursement in a situation whereby the staff invests a portion of his money in treasury bills, government bills. Then there is what reimbursement from all of these things that is allowable to the said staff. Please scroll down. So then we have interest and dividend. Interest earned from treasury bills, government, and corporate bonds are exempt, while withholding tax, 10% is the final tax on other interest and dividends. We have interest on mortgage. We have disability allowance. So we have information to be provided by public. Now, disability allowance, a deduction of 300,000 naira or 20% of earned income, whichever is higher in the case of a disabled person who uses special equipment or the services of an attendant in the course of a paid employment. So this disability allowance is a new thing. It has been there in the Act, but not everybody is quite engaged with it. All right. So there is need for us to get familiar. Disability includes eye problem. It includes those that cannot walk, all right, that are using, what's it called? A chair, that are, this working chair, all right? So we have that as well. So then information to be provided by bankers. So we also have bankers, if there is any business that want to register with banks, they expect that the bank should supply, should ask for TIN from the business owner before they could open any bank. So then we have filing and due dates. Individuals are to file returns not later than 31 March annually. In respect of the preceding year, employers are required to file the following document. Number one, employer's declaration form 1, showing the income of the employees, taxes deducted and remitted in the preceding year. This is due by 31 January. So it's a must. It's a must. So we need to ensure that we file all of this return, incorporating the declaration form of the employer, the remittance card, and the declaration of estimated income and application for tax relief. Before I forget, please ensure that it is free. Ensure that your company gets your tax clearance certificates. It is good for the company. It means that the said company has been cleared of the preceding year. All right. Particularly in Oyo State, I don't think they go to the company before the issue of tax clearance. Company like Lagos State, Ekiti State, they come and carry out tax audit before they issue out tax clearance. Not all, because Lagos State has segmented their tax units, sections per areas that they are. All right, including Oyo State anyway. I know of Egbeda also. Egbeda has, I think, 2 or 3 units, all right, that are in charge of that area. So please ensure that you get your tax clearance certificate every year, please. So we have due date for payment also. These ones, I believe that everyone should be quite familiar with it. Pay as you earn must be remitted on or before 10th day of the month following the payment of salary, which means by now your company should have paid before 10th of September for the 1 of August. And for the 1 of September, before 10th of October, your company must pay. All right? It is very important. And if you are having issues to pay salary as a company, there is no problem. If you pay half salary, what they will tell you is the fact that you pay half salary does not mean that you should not pay the payee. They will tell you that you should calculate the amount of payee payable on that half salary, and you should remit it with the state government. All right? So please take note of that. So for individuals under direct assessment, payment must be made along with returns within 90 days of the fiscal year, not later than 31 March. All right? So correspondence, notice of assessment and objections, courier service, email, and other electronic means are available. So then we have penalty for non-payment of tax. So we have 10% per annum of the amount plus interest on an annual basis at a bank lending rate. So in practice, a one-off interest rate of 15% to 21% is applied. So late filing attracts a fine of 500,000 naira in the case of corporate bodies and 50,000 naira in the case of individuals. So please take note. Of course, there are penalties. All right. Apart from the penalties, even given to individuals or to the company in particular, as a professional, there is also a corresponding effect on your professionalism when there is issue of non-remittance of tax. Particularly, I don't know how your clients will take it. All right, but we have some clients who who put you on a black book. All right, so that is that. So statute of limitations, except in the event of a fraud, willful default, or neglect by the taxable person, in which case there is no limitation. Please scroll down. So let us now go to Social Security contributions. This, I want to believe that not everybody is quite familiar, and that is the area I want you to know. All right, that I want you to actually open your mind to. All right, so because this is another aspect of payroll management, particularly payroll management. Payroll is not difficult. It's all where it is difficult is where you have large or huge number of employee. We are talking about 500 employee. We are talking about 200 or 100 employees. All right, that is the area where payroll computation is difficult. All right, because it has to do with what? With data. Where it is not difficult is where you have payroll software. All right, so now, number one, employee compensation scheme. Employee compensation scheme. And this has to do with the Nigeria Social Insurance Trust Fund. The ECS is a social insurance scheme that provides guaranteed compensation to employees for any death, injury, disease, or disability arising out of or in the course of employment. All employers of labor are obligated to contribute at least 1% of their monthly payroll to the fund managed by the Nigeria Social Insurance Trust Fund, NSITF. Now, please, where you have huge number of staff and you are paying like 10 million naira, 18 million naira, 40 million naira to your staff, it means that when you be paying this NSITF, you'll be computing 1% on the total amount that you are paying to your staff. And now what they'll be telling you is that you'll be paid on the gross salary. On the gross salary that you are paying to your staff, which is around how much is 1% of 40 million? I think that should be 4 million, right? So you are paying 4 million. That is a huge cash flow. Huge cash flow out of the system, out of your company system pocket. So it's a huge problem. I know of companies, many companies are paying millions, billions of money. They don't have issues with it anyway. I don't want to be mentioning the name of companies, all right? So that is one area. But for small businesses, probably you are consulting with small business or you are engaged with, medium business, please, before they identify you, you need to identify them, all right? You need to identify them. It is what you prepare that they will adopt, so to say, all right? So scope and application, all employers and employees in the public and private sector in Nigeria, exemptions, members of the, so of course, members of the armed forces of the Federal Republic of Nigeria, other than a person employed in civilian capacity. Even when you are armed forces, you are NPF, you are Army, you are all exempted. Okay, they are all exempted. However, if an army is engaged, an army officer is engaged to be a security officer, in a private engagement, the salary that is being paid to that army is part of the payroll of that company. And that is what they are saying. So we have prohibition. Employers are prohibited from deducting ECS contributions from employees' remuneration. Also, employees must not be allowed to contribute towards indemnity. So all of these social security that we are talking about, employee must not contribute a single dime, all right, or this amount. It is payable solely by the employers. Then we have offenses and penalties. Penalty for deducting from employee remuneration: on conviction, imprisonment for a time not exceeding 1 year or to a fine. You can actually, go through all of these things should the material be shared with you. So we have 100,000 or to both, as well as repay the deduction. Actually, many of this penalty is there for we professional. If any of these people identify you, whether the insurance fund or the training fund, industrial training fund, or the health fund, if they identify you, they will be coming with their own penalty. Now, it is up to you to tell them that this is what the law says, all right? But if you don't know what the law says, you will not be able to tell them. So that is the area of offenses and penalties. We have 100,000 naira or to both, as well as repay the deduction. For a body corporate, a fine of not less than 1 million naira upon conviction and repayment of deduction. Now, this is where the issue is. They said a fine of not less than 1 million naira, then they can charge above that. And that is why I am hammering that all of this is based on what? Self-assessment. Self-assessment. All right? So please take note of that. Can we please scroll down? All right. Now, okay, employee, employer. I think one area that is not here that I want to put is payroll. All right? Payroll. And all of the acts that established the insurance, social insurance, that established ITF, define payroll as a basic salary and other emoluments, including benefits in kind. Please take note of that. So they said remuneration, okay, so it is, I think it's here. They said remuneration means basic wages, salaries or earnings, designed or calculated capable of being expressed. Okay, down below, the last two lines said, which include rental, transport, meals, and utility or other allowances as may be determined by the board from time to time. Now, please take note, when they are coming to you, they will be asking you, Where is your payroll schedule? Where is your financial statement? Please don't expose your company. All right? Please don't expose your company. For big companies, there is no problem whatsoever. Of course, because if you have money to pay, then pay it. There is no, for big companies, of course. Most companies, most bigger companies, they don't have issues. They have all of these things planned out. Even when you go and look at their financial statements, I want to charge you now, go and look at the financial statement of most of these companies. If they categorize all of this form into admin expenses, you may not see it. But if they recognize it as a line item, then you will see the amount being paid to ITF. You see 700 million. In fact, you can go and download a LAPO microfinance financial statement. You will see it there. They are paying over 600 million as their ITF form. If I can remember, as at 2017. So imagine what they will be paying now. All right. But for small businesses, it is better for you to prepare a note. And what you need to do is that you need to write up a letter stating that you want to register with them. All right. And for health insurance, of course, it's covered health. And at the event of death, I think we will go there momentarily. So let's just scroll down before we go there. So I'll just mention this. Okay, now I can say this right here. This is Industrial Training Fund contribution. So the ITF was established by Decree 47 of 1971 and amended in 2011. Now we have item for the rate is 1% of annual payroll cost. Is the same thing, all right? And payroll is defined as the sum total of all basic pay, allowances, and other entitlements payable. So like as I was saying that when they identify their company, the first thing they want to do is that they want to see whether you can pay this amount. All right? Though they will not first of all charge you, they will not tell you that you should pay this amount. They will tell you that they identify that your company has not been paying, all right? Then you should come and register with them. So when you are coming, they will be telling you that you should bring your payroll schedule. You should bring your financial statement. Please don't make that mistake. Please don't make that mistake. Once you give them your financial statements, once you give them your payroll, and your payroll will incorporate the basic pay, will incorporate other allowances paid to your staff. Then the sum total will be combined together, then 1%, and before you know it, because it is on the employer, and before you know it, the bank and cash balances that you have in your financial statement will be swept off by the total sum. And under ITF, the act, the decree, empowers ITF to charge a particular company that has not been paying, but has been in existence for over 6, 7, 10 years. The act, the decree, empowers the company to charge your company for 6 months. For 6 months. All right. So if you now said you of course you can negotiate. Of course, you can write letters upon letters and all of that. But the thing is, it is better to negotiate for a better deal ahead of time rather than they identifying your company. All right. So all employers with a minimum of 5 employees. So the minimum staff that you can have or that a company can have is before they can be charged is 5 employees. All right. So if you have 4, you are exempted. If you have 3, you are exempted. But from 5 or annual turnover of 50 million naira. So we have incentive, an employer entitled to a refund of 50% of contribution made if adequate documented training courses are provided as prescribed by the ITF. Now, this is the area. If your company pay a total sum of 20 million naira, of course, you can be refunded the sum of 5 million naira and 10 million naira. All right. However, they will ask you to provide a training manager to come and perform a training, to be part of the training in which they will organize. Then you will pay a certain amount for the training. So it is in that training that they will tell you the whole documentation training courses. All right. So please take note of that. Your company, if paying ITF, can be refunded 50% of this total sum. So filing requirement, ITF form filed with evidence of payment annually not later than 1st of April of the following year. Then we have offenses and penalties. 5% of the unpaid amount to be added for each month or part of a month after the date on which payment should have been made. So we have statute of limitations. The contribution is recoverable at any time within 6 years from the due date. So please take note. Please take note. All of these payments are based on self-assessment, though there may be tax audit, but it's not a problem. One thing is that you need to clear your books, prepare your books. Then, if your company has not been registered with all of this contribution, whether a small business, medium business, or large business, please ensure that you yourself register this company. One thing about our job is there is one issue of nuclear. Maybe you are quite familiar with it under audit and assurance, nuclear, which is issues that has to do with non-compliance with laws and regulations. So it is your duty as a professional to ensure that areas where your companies are not complying with some laws and regulations, especially pension, remittances, especially most of these things that we are discussing right now, please ensure that you escalate it and get your clients to register. Please scroll down, sir. So we have National Housing Fund. So the aim of this fund is to provide loans to Nigerians for developing, purchasing, or renovating houses and encourage housing finance among low and medium income earners. The fund provides long-term loans to mortgage institutions for lending to contributors of the fund, and the rate is at 2.5% of monthly basic salary, exemptions to Nigerians earning less than 3,000 naira per annum, and all expatriates regardless of income level. So filing requirement, a schedule of payment indicating the amount deducted from each employee and the period covered to be submitted to the Federal Mortgage Bank of Nigeria. If you look at this, you will see that not all companies are engaged with this. All right, not all companies. So we have penalty, failure to deduct or remit, employers 50,000 naira, self-employed person 5,000 naira, or 1 year imprisonment on conviction or both. All right, preventing or obstructing deduction or remittance 5,000 naira or 1 year imprisonment or to both on conviction. Failure by authorized employee to make deduction on behalf of the employer 20,000 naira or imprisonment for 5 years or both on conviction. Seriously speaking, we have a lot of liabilities on us as a company, and that's the truth. Okay, before you know it, you pay 1% of that one, you pay 1% of this one, you pay 2.5% of this, then you realize that all the cash flow you are using to operate is gone. And all of this, even CIT is being is based on the bottom line figure. But unfortunately, this amount is not based on it. All right. All of this social security contribution is not based on it. All right. That is why I'm hammering on self-assessment. Okay. Please scroll down. Now, pension. Pension. Now, for pension, this one, I believe most of us should know it. All right. What the law states is 18% of the total emolument paid to the company, where 8% shall be borne by the employee and 10% will be carried by the employer. All right. So the rate is not less than 80% of the monthly emolument. That is what the Act said. All right. And with a minimum contribution of 10% by the employer and up to 8% by the employee. Please look at it. They said minimum contribution. All right. Minimum. It is not a maximum. All right. Minimum. So the employer and all the employee may make additional voluntary contributions. So if you have a pen ID, of course, you can just call your PenCom, your pen people, you tell them that you want to make your personal voluntary contribution. They will give you the account, you pay it, and it will hit your account, then you receive the alert. All right. So you can do whatever contributions you want to do. But what the Act said is 18%. And it is against the law if you are deducting as a company from your employee and you are not remitting. All right. So where an employer decides to solely contribute to the scheme, the contribution will not be less than 20% of the employee's monthly emolument. So which means if the employer, your company, decide that, okay, oh, no problem, don't deduct anything from my employee's salary, I will bear it. So which means the minimum contribution should not be less than what? 20%. Then obligated persons, all employers in the public sector and private sector and private employers with 15 or more employees. So we have exemptions, incentives, persons mentioned in Section 291 of the Constitution of the Federal Republic of Nigeria, members of the armed force, the intelligence and security service of the Federation are all exempted. Then expatriate employees may join the scheme at their discretion and with the agreement of their employers. So please take note of all of these simple notes. All right. So filing requirements, a monthly schedule showing details of the employees' retired savings account, PIN, and their monthly contributions. PIN is pension identification number. So if you may have, it should start with PIN or PEN. All right. Then you will see the number. All right. So we have voluntary contribution. We have the LIRS and the Joint Tax Board issued notices in 2017 on voluntary pension to curb possible abuse. PENCOM also issued a directive of PFAs and PFCs to limit the frequency of withdrawals that can be made to once every 2 years and tax any amount withdrawn within 5 years. This area, it depends on various pen company. All right. Like my own now, Crusader, they were telling me the other time, but I could not even, it has a way in which you can deduct from this. If you resign from a company now and you are out of job for within 3 months, you can go there and collect certain percentage from your pension. All right. So they have restructured a way of withdrawal so that it will make it easy for most of employees that are out of job, and that are actually also in need of money. Then due dates, not later than 7 working days after the payment of employee salary. Please. Okay, so not later than 7 working days after the payment of employee salary. So please take note of that. So we have offenses. I think I saw a question, but after the class, we are going to look at it together. So offenses and penalties: a pension fund administrator or pension fund custodian that reimburses or pays staff, office, or director for a fine imposed on such person is liable to a minimum penalty of 5 million naira and will forfeit the amount paid or reimbursed. So we have area of misappropriation of pension. Please, it's a prison term of up to 10 years or a fine of 3 times the funds misappropriated. Unfortunately, that's not the case in our reality today, where we have animals from UI going to swallow up pension money. All right. So we have for PFCs, the act imposes a penalty of at least 10 million naira upon conviction, where the PFC fails to hold the funds to the exclusive preserve of the PFA, or where it applies the funds to meet its own financial obligations. In the case of a director, 5 million naira or a term of 5 years imprisonment or both. So I hope we will not have a case to recourse to this. Please get yourself familiar to all of these acts. So any person, PFC or PFA, that refuses to produce required information or produce false or misleading information is liable on, please scroll down, sir. So it's liable on conviction to a fine . Thank you, sir. So information or produce false or misleading information is liable on conviction to a fine of not less than 200,000 or prison term of not less than 3 years, or both. A fine of penalty may be imposed for every day the offense of continues. Well, I believe and I hope that none of us will have a case to fall back to these offenses and penalties. But please try to go through it so that we can quickly go to the computation aspect. All right. So is the monthly emolument is the same. So please, Mr. Money, please, can you allow me to share the screen from here? Thank you very much, sir. Okay, they said host disabled. Okay, thank you. All right. So, Mr. Money, please, can we go to the aspect of questions before we go ahead with the calculation aspect? Or we should go on with the...
Well, I would have suggested that we finish the class before we go on to questions,
Okay.
because questions will be very much, and that will take some time. So let's just finish everything, then we can now take questions.
All right. That's what duly noted. Okay. Now, so this is a schedule used in preparing payroll. Like I said, payroll in itself is not that huge. It's all about addition and subtraction and nothing more. It's all about addition and subtraction. Okay, so what you just need is to get yourself conversant with this payroll schedule, and after getting yourself conversant with it, then be a lover of figures. It is very important. So you can see this is Elite's professional salary schedule for September 2023. Then we have Mr. Kuforiji Elite and Mrs. Kuforiji Elite. Though, if you've been given an offer of appointment for a particular job, you will see that Inside there, you have your basic salary. If there are any allowances, you have allowances. All right. So now, but for Mr. Kuforiji and Mrs. Kuforiji elites, what we have is they have basic salary of 500,000 naira. All right. Then you have the transportation allowance. All right. Now, this is the basic salary. So there's a possibility for you to have other allowances. Right there, we have clothing allowances. Then we have others. We have leave allowances. We have lunch allowances. We have housing allowances. Then we have gross salaries. All of these things will form part of your gross salary. All. And when they are charging you on all of the social security contributions that we are talking about, they will not be charging you on your basic salary. What they will be charging you on is on your gross salary. So I want to tell you that, of course, I expect total compliance. So the rest is on you, of course. So then this is the gross salary that you'll be paying it on. You'll be paying all of this request on the contribution on, right? So now let's just take a look at this. Let's assume that this is your 500,000, your basic salary, and then your 400,000 naira. On this total schedule, you can see formula here. So please, the only mistake that you will not do is to tamper with each of these cells. Please do not tamper with. So if you're having a clothing allowance of 20,000 naira, of course, you have 20,000 naira. You can see that at the end of it, the gross salary will change. Then for Mrs. Kuforiji elites, you have 10,000 naira. Then you have 470,000 naira. So everything will continue. So your payroll schedule, basically, like we see the formula, we constitute the total emolument that is being paid to the employee. The total will now form your what? Your gross salary right here. All right. So then your others, the others, let's say we have others of 5,000 of say 5,000 naira. Then this one for 2,000 naira.
Mr. Aziz, please mute
yes.
this Mr. Techno and also the other person so we can hear ourselves.
Okay. All right. So then you have all that. So if you have leave allowance paid out or not, so you add it also. All right. Now, so then you have the total gross salary. So this aspect is vital. This gross salary is vital because it is what determines what you are paying to social security funds, either ITF and the likes. So this is the gross salary. So, but this, if you look at the total sum, that is around 1,072,000 naira. It's not so much, right? But where you are having 10 staffs, 20 staffs, 50 staffs, 100 staffs, 500 staffs, then problems set in. It's now come with the issue of cash flow. All right. So I believe you understand that. So then the next thing is what? Deductions. So if you look at all of these deductions, then you have from this loan cooperative deduction, service cooperative deduction, salary advance if given to your staff. Some companies call it IOU. All right, you have it there. So all of these deductions will come together. Then we have NHIS as well. Then we have so this development levy now, it depends on the state. Some states put it on the employer, while some states put it on the employee. All right. So if your own state, because the law of states difference. In Lagos State, development levy is actually on the staff. Most states put development levy on the staff, on the employee, not the company. All right. Some company makes it 100 naira. Some make it a total sum of say 500, 1,000. So you divide it by the number of staff that you have in that state. All right. So, and there are some that are actually also peculiar to states that is not charged in Lagos State, it's not charged in your state, but it's chargeable in other states. So, depending on the state where you are, you need to find that. You need to find that out. All right. Then we have welfare deduction. That is also depending on the company. It is not a law of any state. All right. Then we have NHIS. Then we have total deduction. So you can see that the total deduction, you see all of this Excel has been incorporated with formulas. All right. So please, if you're having this Excel sheet, ensure that you don't tamper with all of these sheet. Then we have net salary. The net salary is the total, the gross salary deducting the total deduction. Then you have your net salary. So this net salary is what the staff will collect. All right, so I will be focusing majorly on this payroll. I would have come with how you are going to pass this payroll account-wise, if when you are passing the entry on your accounting software. All right, but I wouldn't want to touch that. All right, so then we have these computation of PAYE. This is what you actually need, basically. All right, you will have it both. All right, so you have the staff PAYE contribution. All right, so monthly salary, of course, the monthly salary is 500,000. The monthly salary is 500,000 right here. Now, this should be the gross salary. Gross salary. All right. Okay, this would be the gross salary. Now, very quickly, then we'll have this equals to gross salary. Okay, so all right. So that is what your gross salary. Okay, so because your pay is computed on the gross salary. Please take note of that. Then we have the number of months. So you also need, because it is a very key area that you need to note. You also need to note the total number of months or the total number of days that your staff had worked. Because we have staff that will be coming in the middle of the month. We have staff that will be working just 12 days. We have staff that will be working just 28 days out of 31. Then you know that when you are computing it, you'll be what? You'll be prorating the number of years, the number of days that the staff work divided by the total of months, say in a 31 days month, divided by 31 days, multiply by say let me just say 600,000 multiplied by 28 divided by 31. So we have 541. So it is very key. So if you are using Excel, probably with your company, or you'll be claiming to be a payroll officer or payroll manager going forward, or you want to upgrade your CV to incorporate payroll as a skill, you need to also take note of the number of these, the number of staffs that absconded, the number of staffs that you employed, the number of staff that you disengaged, the number, many factors that is affecting the components of your payroll. You also need to take note of that. And also, when you are computing PAYE will be based on the amount that you pay out. And let me reframe that, the amount that you claimed to have paid out. So you need to ensure that your company is not overpaying PAYE. All right? Like what one of my oga will say, it is better to pay below than to pay higher. So if you are paying below what is expected, then you will be able to say that, sorry, it is an oversight. Then you now what? Remit the balance. Of course, tax authority also, they are persons. They are individuals. You can what? You can, like I will tell you right now, that ensure that you create relationship with all tax authority. They want to be pampered. They want to be respected. And they want to receive PR. So you have all of these things. Then you have your relief, the relief. All right. So you can go through the relief that is stated in the PIT Act. All right. You can actually also go through it and incorporate it if you are remitting it. All right. So please take note of that. Then we have taxable income, which is the amount taxable. You can see this figure is annually, right? Then we have 7% of 300,000 falls and all of that. So all of these things, we have it in formula. So like I said, this would be made available to you, all right? Then we have 11%, 15% and all of that. Then we have 1% minimum tax, 0, the annual payee, monthly payee. So this is what will be remitted on a monthly basis. So because of our time, because we have 7% left, so I will quickly move on to the next one that I want to share with you, which is the computation of pension. So the pension for the month of September would be like this. The pension for the month will be 600,000 right here. Then we have 472,000. Okay, so for the month of September, okay, sorry, I believe you cannot see the screen right now. So let me share the screen one more. Okay. I believe you can see my pension contribution schedule right now. All right. So now, so we have this for the month of September. For September 2023, Mr. Elite is collecting 600,000 naira. And Mrs. Elite is collecting 472,000 naira. All right. Then we have this, sorry. So we have the 8% on the employee. Then we have the 10% on the employer. So the total sum for Mr. Elite is 108,000 naira payable to the pension agents. Then we have 84,000 naira, 84,060 naira payable same. So that is just the pension contribution schedule. Like I will say, payroll as a job is difficult when you are now dealing with large number of staff, because you need to be up and doing. You work with your HR department. If in your company the payroll officer is segmented under the administrative department of the HR department, then you need to actually work with your admin manager or with your HR manager. Then there is no problem because you are in the same office, right? But if payroll office is under the accounting department, then that is where the issue is, because you need to actually work with an external unit. All right. So you need to consistently work with your HR manager, with your admin manager, every now and then. All right. So that you need to stay updated on what has to do with what? With the employees' welfare. So on this note, I would like to stop here. Then we'll start asking questions. Mr. Money.
All right, thank you very much, Mr. Aziz, for that insightful training. So at this point, we would like taking questions. So if you have question, please, you can raise up your hand in the chat box so I can see you and then call you. And you can also drop your question in the chat box. Let me read it out. So if you have question, please just raise up your hand and then I would call you. Okay, I have some questions in the chat box. Let me read some of them. Let me read some of them out. Okay, so the first question I have here is, my question is on the voluntary contribution of pension. How can someone go about it, and how can employee incorporate it in the payroll? This is coming from Toyosi Abayomi. So his question is on voluntary contribution. How can someone go about it, and how can employee, is it employee you are referring to there or employer? How can employer incorporate it in the payroll? That's the question, sir. So I'll leave it to Mr. Amy to answer. Yeah.
All right, thank you. Now, for voluntary donation, it is quite simple. Now you get the pension company that you are using in your own company. All right, they have agents, they have staff that are in charge of your company. All right, if it is Crusader, if it is anyone, if it is Redix, you get them, you get their number, you locate them, you locate their branch. All right. So what they will do is that they will give you the account number. All right. So you go and pay into that account. So once you pay into their account, you give them the evidence of payment. So they are the one that is going to put it in your own pension account with them. So after they've paid into your own pension account, the next thing you see is you receive alert. So your question is how are you going to do it if you want to voluntarily pay additional money? For example, now, if you want to pay 1 million naira into that account to secure your future, and that is how you are going to do it. All right. So you go, you get the account number, you pay it, you contact the agent under your own account, then the person will pay into that account, then you receive your own alert. All right. I think that answers your question.
You didn't tell me you're expecting your wife.
Mr.
All right.
Mori.
Thank you very much for that. Please, you can mute yourself. I will call you so that we will not have a rousy class. Just mute yourself. I'll call you so that Mr. Abidemi, please, can you mute everyone so we can have the... Just raise up your hand if you have questions. Once I see your hand. Okay, so Okay, I hope that answers the question that Toyosi asked earlier before I go to the question.
No, not yet. What I'm asking is that in a situation whereby you want to be contributing voluntarily and you want it to be deducting from your salary at source, is it that the employer will I don't know how they actually go about it. I just want to learn how they go about it so that it will not just be as if once the money comes to your account and you now be the one to be remitting to the pension administrator. Can the employer deduct
Okay.
it in along with the normal 8% that they deduct
Okay.
from some? That's my question.
Okay. 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 Thank you. Now, of course, the company legally only requires to deduct 8% from the employee, not above 8%. It is the employer that has the right to deduct above from their own purse if they want to. Are you with me, Mr. Tiosi?
Yeah, I'm with you.
Yeah. So even if I, as a manager of payroll or finance, I will not even subscribe to it. All right. So what is legally required by the employer is to deduct 8% from the employee and not above. So any other voluntary donation should be out of the employee's pocket and not from the deduction that will be made by the company from the employee's salary. Do you get me?
Okay. Thank you.
Yeah, but
Thank you
in that
very much.
regard, what I'm trying to say is that is it that the employee will now be the one after receiving the salary, will now be the one that will now be remitting the additional voluntary contribution by himself, or
Yes.
can he actually mandate the employer to also increase the employee the pension they are deducting from his salary, so that the 8% and the voluntary one he wanted to be contributing can be deducted from his salary at source? Can it go by that way? Or so that the reason why I'm asking this, by the time you increase your voluntary pension, of course, your payee will reduce. And that's one of the ways in which people are trying to reduce your tax. So in that regard, in that situation, and if a staff want to go by that route, so that the main purpose is for him to just reduce the payee, to reduce it, and then increase your pension contribution. So that's the reason why I'm asking that, can it be made mandatory, or can it be possible if the employer can increase the employee's pension by remitting the 8% plus the voluntary one he wanted to contribute?
That's what I'm saying. Now, the employer cannot legally deduct above 8% from the employee's salary. The law states that it is an additional contribution. So the 8% is standard on the employee. Now, any contribution that would be made by the employer, don't forget that it will not pass through the payment of PAYE. All right. So a further contribution which is additional is not through the payroll of 8%. Do you get what I'm saying now?
Yeah.
So
Yeah.
So the 8% is standard on the payroll. Any additional is from the employee. So whatever additional that will be made by the company can be above 10%, which will not affect the payroll.
All right. Thank you very much, Mr. Abidemi. Let me add to let me add to what Mr. Bidemi said. So I got your question very well, Toyosi. So you can actually mandate your company to remove certain percentage or certain amount for voluntary contribution, but it has a process. The process is that there must be an email, or you must communicate to your employer that this is the instruction I'm giving to you, remove this. And it will be clearly stated on your payroll that this particular deduction is not part of the 10% or the 8% deducted from for what is legally mandated by the employer to deduct. It will be stated in a different sheet, right? And you will also notify your PFA agent, whosoever is handling your account for you, that your employer will be contributing a voluntary contribution into your account. So there is a way that the PFA agent separates that particular amount that will be paid into the account, but at the end of the day, all of them will be merged into that account. So it will be separately stated that this is the payment, this is the legally 18% that is mandated by the employer to remit, and then this is the voluntary contribution that the employee has asked the employer to also pay additionally. So you can do that, but it will be clearly stated. First of all, there must be an instruction stating that you, the employee, requested for such an amount to be deducted. So every company has their own setup. Some company will tell you that no problem, is fine. There's a way that the payroll officer will put it on the payroll. It will clearly show that this amount is totally different. While some companies, they will tell you to go and do it yourself, just like what Mr. Bidemi is saying. They can tell you to go and do it yourself. So in that regard, you communicate to your PFA. It's going to give you the account number to pay that money into. Once you pay the money, they will see it from their end, and then the PFA agent will transfer it into your account. So there are different processes that any company can abide with, but whichever way that is convenient for such a company, some can tell you that no problem, they will mandate it, they will put it on their payroll since the instruction is coming from you, and then they will be remitting it together with the 18% they are remitting. But it will be clearly stated that this particular payment is a voluntary contribution from the employee. While some other companies, they will tell you to go and do it yourself. And it's very simple. All you just need to do is to communicate with your PFA agent. He will give you the account number. If there is an account number to pay into the account, once you pay, just notify him. If he sees the payment, he will transfer it into your pension, your RSC account, whichever way it works. So, but you can do it like that. You can mandate it, and if it's fine with your company, they can go ahead to do that for you.
Thank you very much. Clear. Thank you. God bless.
Okay, thank you very much for that. So I have another question here. I have another question here from Mr. Shafiu Ahmed. He says that, sir, is there any legal way to reduce the amount of pension contribution to a company? Is there any legal way to reduce the amount of payment of pension to a company?
No, there is none. The law is the law. There is no legal way to reduce the payment of pension. And I will just tell you that don't focus on reducing pension. You know, if you need an expert advice on the way you can reduce anything, it is not in training. It should be a personal call. But, you know, don't reduce any form of anything payable to the government whatsoever. All right? Don't. So there is no legal way to reduce pension.
Okay, thank
Mr.
you
Money.
very much. Thank you very much for that answer. I hope that answers the question of Mr. Shafiu. So I have another question here. Please, if you have a question, you can raise your hand so I can see you. But pending that, let me read the question I have in the chat box. So I have another question that says, for the pension contribution, is the rate on the gross salary or the basic salary or on the basic housing and transport allowance? Thank you. This is coming from Adejoke. It says, is
Sorry,
the
can I ask the
rate...
question again?
Okay, it says for the pension contribution, is the rate on the gross salary or on the basic housing and transport allowance? Thank you.
The pay of pension or housing or ITF, which one is the question is referring to?
I think she's asking about pension itself. That is is it the 8% now or the 10%? Adejoke, are you there so you can ask the question very well? Are you there?
Hello.
Yes, thank you.
Okay,
For
all
the
right, go ahead.
8% and also the 10%, is it mainly on the basic salary, the housing and the transport, or the gross salary itself?
The act states that it is on the monthly emoluments. Is the monthly emolument, and according to the Pension Act, monthly emolument is defined as the employee's contract of employment, provided it is not less than the total of the employee's basic salary, housing and transport allowance. So it is referring to the monthly emoluments inclusive of other allowances. Adejoke, are you there?
Yes, I am.
So both the 8% and the 10% is referring to the total emolument payable to the company. Some company charge it on the basic. Some company charge it on some reduction. All right, after they try to maneuver and deduct and reduce the basic pay to the staff. All right, but the thing is that what the act says is that the total payment that is payable to the staff, like a personal payment belonging, not operational expenses, because there are some allowances that is paid to the staff that is operational in nature. All right, and that is a kind of a way you can coin some of the payments you pay to your staff. It may be some emoluments to the staff, but you can categorize it under operational expenses. All right. So, that is one aspect. So, but of course, the tax the tax authority that will be coming also will understand whatever you are saying, whether it is operational wise or not. But the bottom line is whatever money that is a benefit to the staff is what the act is saying that it is total emolument, 8% multiplied by total emolument and the 10% as well. All right. So I believe I answered the question.
Hello,
Thank
sir.
you.
Hello,
right.
sir. Hello.
Yeah, go ahead. Go ahead.
This is Adeyemi. Please, concerning that pension issue you are talking about,
Okay.
the most of the companies, they normally base it on basic, peculiar, and then rent, which is allowance. But we are now talking about the other allowances now. Let's say in a university setting where we have they are paying HOD other allowance, because is it going to be part of pension? Because I think some organization or some of the university may not even take it into consideration. Other allowance, I think the pension based on basic, peculiar, and rent. I know it's now saying that maybe the other allowance is maybe operational, whatever. But I don't really understand that. Maybe you can shed more light on that one, because I know in some organization they may not even tamper with that other allowance. They know the way they are doing it as if it's not part of how to. They will not include it in the calculation of pension. So I want to shed light on that one very much, please.
Okay, I have stated it now,
Mhm.
that there are some allowances that is paid to staff. I know of a company that expressly stated in their own letter of appointment that the staff is entitled to basic salary, one allowance, and the state, I don't want to mention the allowance, of course. So they state they stated the allowance and all of that. Now, when I went through all of these things, when they had issues with the Internal Revenue Service of that state, I told them, fine, you've mentioned this inside your employment letter, because when they want to do tax audit, what they will say is you should provide it. So the question now is this: in the engagement letter of those lecturers, is the housing allowance stated?
Mhm.
If it is part of the component they should have recognized in the pension.
Mhm.
Now, the thing is this: when you look at how it is defined in that pension, okay, it says that emolument means total emolument as defined in the employee's contract. As defined in the employee's contract of employment, provided it is not less than the total of the employee's basic salary, housing, and transport allowance.
Okay.
All right? So it is part of it. Do you understand? But the truth of the matter is, because it has to do with cash flow, we are talking payroll and we are talking as accountants. All right. Now, it has to do with cash flow. You understand?
Okay.
So many companies try as much as possible to remove certain components out of what is paid to the employee. All right.
Okay.
So it should be on normal ground. Do you understand?
Yes, sir.
But if removed, it is, that has to do with the university and the staff.
Okay. And that's what some is obtainable in that place, that when they give them the HOD allowance, they will not include it in their pension stuff.
Is HOD allowance stated in the employee's contract?
No, it's not stated.
So if
Maybe
not
they give
stated,
them other allowance, maybe when they form a committee, maybe
okay,
student affairs, whatever. So
all those ones, when they want to categorize it, they should not make a mistake of presenting it as a line item in their financial statement. Rather, it should be categorized under administrative expenses. And if it is categorized under administrative expenses, then it is not qualified as emolument to the staff, but an operational expenses.
Expenses allowance. Okay, no problem. Thank you. I think it's clear.
All right.
Thank you, sir.
All right. Thank you. Welcome.
Okay, thank you very much. As Mr. Tajuddin, okay, you can ask your questions.
Yeah. Good evening, sir.
Good evening.
You're welcome.
So it is actually Miss Tajuddin.
Oh, sorry. Okay, go ahead.
Aside from the normal salary, normal monthly salary, this what's got the employee is now paid that allowance. Will it also be part of the gross emolument to be considered, or we have to deduct it? I need to understand that part, sir, please. Thank you, sir.
Okay. Now, it is quite simple. We've said it. That is what the Act said. The Act says that all total emolument that the staff is benefiting. The mistake that most of these companies me is this. In a bid to entice the staff to join the company, they will incorporate all of these allowances. And some may even state it there, some, not all, that this allowance is payable if you do this. But it is just a bill to entice the staff. But in reality now, when they are computing all of this social security contribution, they will not recognize it. They will be recognizing only the basic pay. So the normal ground, the act require that any emolument, payroll, unfortunately, I am not with the ITF handbook. I have it in the office. The payroll, they list all of the benefits that you would ever think of inside their handbook, inside the act of ITF. So anything that you think the staff, they even put it there that, and other emolument that is paid to staff. So even if the act is not mentioning a particular thing, they are also stating it that, and other emolument. So be it they give you wardrobe allowance, be it they pay you anything allowance, it is part of emolument that is enjoyed by the staff. All right. So you know, that is the reality. But not in practice anyway. So, all right, Mr. Money.
All right, I hope that answers Zainab's question. All right, so
Yes,
I
sir.
have a question here. It says that at what age can someone apply for part payment of his or her pension contribution, and what percentage can be given?
This is the thing. Sorry, most pension companies have their peculiarity. All right, what is obtainable with Redix is different from what is obtainable with a Crusader. All right, so you have to call your pension company to your pension administrator to find out what is obtainable with them. All right. So, and it is actually the law has been reviewed that you can make a withdrawal. All right. So the rest of it now depends on the pension administrator, though they limit withdrawal from your pension. All right. But for me to answer, it depends on what is obtainable with your pension administrator. Do you get my answer? So that is that about that question.
I have a contribution to that, sir.
All right, please go ahead.
Hello, concerning the voluntary pension, you see, we have voluntary pension, we have statutory deduction. The guy, one guy, other person, someone has a question the other time.
Okay.
For the voluntary contribution, someone can access it at any time because it's voluntary. I don't think that one is has a law that because you are the one doing it voluntarily. Even when you are not more in the system, you can access that one at any time because it's your own something. I think I'm making sense. I just want to make a verification on that, sir.
Are you asking a question? Are you asking a question?
I'm making a contribution that I know.
Or you are making a contribution?
I'm making a contribution. Is that contribution making sense? Because that's what I know about the voluntary contribution.
Yes, yes, you are very correct, Madeyemi. You are correct. For the voluntary, you can access it anytime. Just notify them that you want to, but there are some processes that you also need to carry out. You just do some little documentation and the like, but you can access it anytime. But the one for the statutory, that one requires some law. Like I know of, if you are out of job for 4 to 6 months, if you are out of employment for 4 to 6 months, and you have some statutory contribution, you can request from your PFA to give you some funds. So they are going to give you a percentage. So the percentage, just like what Mr. Bidemi said, the percentage is peculiar to each PFA, but you can ask for it on the ground that you are out of job for good 4 to 6 months. So once you can provide that evidence that you left this particular job and you are not working from that period up to 4 to 6 months, then you can request for certain percentage, which will be reviewed based on their own percentage. And then if all the procedures have been followed, you will be given some percentage. There are also some other grounds that you can also request for your statutory contribution. But for the voluntary, you can take it anytime once you have fulfilled the requirement.
Okay. I think that of when someone is not more in the system, I think it's about 25%. I think so. I think
Okay,
some of the
yeah.
PSA, they know they do it.
It could be.
Thank you, sir. I'm very grateful, sir. Thank you, sir.
All right, you are welcome, sir.
Yes, sir.
Okay. Okay, sorry, I have some questions here also. Okay, all right. So this question, let me just read it very carefully. So the question says from Adejoke, he says, in the course of our audit exercise in a company, we came across 6% contribution from the employees. After inquiring from the accountant.
So, Mr. Boni, can you start again, please?
Okay, let me start again. She said that in the course of their audit exercise in a company, they went to a company to carry out an audit. Okay. They came across 6% contribution from the employees, which is supposed to be normal 8%, but they saw 6%. And so after acquiring from the accountant, he said the management staff agreed on the rates. In such case, is there any penalty for wrong deduction and under remittance? Do you get the question?
Can you please take it again?
Okay, all right. She said, in the course of their audit exercise in the company, they went for an audit exercise in the company. And then they now saw that instead of the employees to be remitting 8% from 8%. Their salary, they are remitting 6%. And so when they now inquire from the accountant that why are you deducting 6% instead of 8%, the accountant said that the management agreed on that rate, that they should be deducting 6% instead of 8%. So she's now asking that, is there a penalty for wrong deduction and under remittance according to the law?
Okay. Now I get. Of course. Now, as accountant, I think we need to all be careful and with our clients, we also need to be pointing some things out to them, most especially in a written form. Because once you become a chartered accountant, you become liable to every actions and inactions of your company. Now, for the accountant to say that 6% for them to be contributing 6% and the management agreed to it, it's not right. Now, the law, if you go and read the offenses and penalties, the section 99 to 104, 104 as the section 104, and I will read, says that where no specific penalty is prescribed, a person who contravenes any provision of the Pension Reform Act will be liable on conviction to a fine of not less than 250,000 naira or a term of not less than 1 year imprisonment or both. if you read all of the offenses and no specification of if there is any underpayment or under deduction, this is the offense and penalty. If the law does not state that, then this section 104 will suffice. Are you with me? This section 104 will suffice that such person will be liable to not less than 250,000 naira or a term of not less than 1 year imprisonment, or both of these penalty. So of course, the act says that minimum of 8% and 10% from the employee and employer respectively, and the deduction of 6% is below what the act said. All right, I believe I answered your question.
Yes, thank you very much. Just like what Mr. Bidemi said, you know, as a chartered accountant, most especially a chartered accountant, if you are still an accountant and you are not chartered, you can still receive some grace. But as a chartered accountant, it is very, very important for you to do the right thing, because you can be penalized even though the management agreed that they should remove 6%. As a chartered accountant, you should not agree to that, because if they are coming for the company, they are going to call you, because the first thing that the whosoever that is coming for that audit, the first thing they are going to ask is that who is the accountant that prepared this report? Who is the person that prepared it? They will not say it's the management that said is that you remove 6%. Most especially when you don't have it documented. Most especially when you don't have it documented that you have advised them to do the right thing and they refuse. Once you notice that something will lead you into trouble tomorrow, please advise them to do the right thing. And if they fail to do the right thing, you can, of course, there is another job out there that you can do, because your own qualification and your own profession is also at stake. Because even if they come now and they are asking for documentation, that why are you as a chartered accountant, is it that you don't know? Because what they will be slapping on your face is that you don't even know the law, you are not qualified, you are not competent to handle that particular position. Because it's not actually right for you to deduct 6% from employee and not 8%. The law is there, and you can be liable to imprisonment. You cannot say you want to go to prison because of somebody saying that you should do the wrong thing and then you are doing it. So in such an instance, there is penalty, and there is also fine for under remittance, most especially when you are not complying to what the law have said. But I'm referring to the accountant who is preparing such a report now. If you find yourself in such situation,
I have, Mr. Money.
Yes.
I have a contribution from right here. The person said that I think employees 8% is maximum, and meaning it can be less, while employers is a minimum of 10%, which can be done, my take, sir. Now, sorry, Mr. Money, for cutting you short, because I want to quickly, make this contribution.
Okay, go ahead.
That we have from Mr. Tomi Ayantoye. The act said that the minimum of 18%. Now, the below 6% will suffice if the employer carry the burden of 2%. I don't know whether you are with me, Mr. Tomi Tayo. The 2% difference will suffice if the employer decided to carry the burden of 12%. So which means the employee is paying 6% and the employer is paying 12%. So the question now becomes that, so, okay, is that Mr. Tomi Tayo?
Yes, I was cut off by network.
Okay. So that is the stand of the law. The stand of the law is 8% for the employee. All right. So I repeat, if the employer is deducting 6%, the employer should be ready to pay the difference of the percent in which they are deducting from the employee. So the standard is 8%. I can now ask the person, I think that is Adejoke, if the employer is paying the difference, and if not so, then the accountant should be careful, particularly if the person is a chartered accountant. I think that is what I want to add before Mr. Omoni continues.
Yes.
Yes, thank you very much. So I think that answers the question perfectly. So if the employer is ready to bear the burden of the extra amount, no problem, it's fine. In as much as your 18% contribution is intact, you would have no issue. All right. So let me see if there is any other question that we've not taken, which I don't, I doubt if there is any question we have not taken. Okay, so can we take one more question before we call it a day? Do we have anyone that wants to ask just a question? Then we'll call it a day.
Yes, I have one, sir.
Okay, Mr. Tommy, go ahead.
Yeah, my question is concerning the person that raised the issue of voluntary contribution the other time. You know, the intent from the question, if I got him right, was that to reduce the payee tax liability.
Yes,
so,
I think,
I want
yes.
to ask, if somebody now decide to reach an agreement with the employer to introduce the voluntary contribution and to be deducted from source, will that be allowed? Will it form part of the allowable deduction for the purpose of payee?
Okay, yes, I get your question very well.
Okay.
All right. Do we have anyone from the audience that want to answer that question before I give it to Mr. Bidemi, and also before I say what I have to say on that? Do you have anyone from the audience who wants to throw more light on that? Okay.
Hello.
Okay, all right. Oh, yeah, go ahead.
Yeah, I think the adjustment to the payee in the Finance Act, I think not too long ago. Recently we don't actually consider pensions as deductions for CRAs to payees. So it doesn't affect the PRAs. Pensions doesn't affect the consolidated relief allowances. Yes, they don't. But for payees overall, before we do the computations, yes, it does. So I think at the end of the day, increases in pensions only minutely, not as they used to before, because of the fact that we no longer consider pensions as part of the gross emolument on which we compute our consolidated relief allowances as reduced, unlike it was before. So at the end of the day, it's not much. That's what I'm just going to say. Think.
Okay. I don't know. Did we get what Opayemi said?
I don't get his explanation.
Opayemi, please, can you just maybe recap it again?
Okay, I think.
Okay, do you understand the question that Mr. Tommy is asking?
Yes, he's asking whether or not an increase in whether or not a voluntary contribution for pension by an employee would affect payee, his payee.
Okay, all right.
Is that
okay.
it?
Yes, that's it.
Hello. Okay.
Yes. Okay, go ahead, Opayemi.
Okay. So I said, I know before, I think up until about 2 years ago, maybe, yes, about 2 years ago, in the computation, the things that affect pay are essentially the consolidated relief allowances, because those allowances reduce the amount of taxable income. And up until the change was made, pension was part of the gross emolument on which the CRAs are computed. But because of the fact that we no longer consider pensions in that computation, the effect of pension is reduced. Even if even if there's a voluntary contribution, it is reduced. But we still have to finally, before the taxable income, we still have to use to deduct the pensions to get our taxable profit or taxable income in this case for an employee. But I'm just saying that overall, compared to about 3 years ago, the effect is not as it was. That's what I'm saying.
Okay.
I still do. Sorry, did Mr. Money, did you get what he just explained now? Because I could not.
Well, honestly speaking, I'm trying to process everything. So, but what I can pick is, well, let me say I did not really understand what you said, but I pick some of your points that you talked about the previous time. So, but what you said that I would like to also clarify is it is not only the CRA that is deducted to get your taxable
income, yes.
income. It's not only the
Yes.
CRA, the pension is also deducted, and every other statutory contribution like NHF, NHIS, and the likes. So it's just that they do it separately. First of all, you deduct the pension and the likes. You get a gross income depending on how your payroll is being structured. You know, before you now take out your CRA and the likes, you now get your taxable income. So definitely, if there is an increase in the voluntary contribution, which has been accepted by the company, and the company wants to take it, deduct it from source, definitely that should also reduce your taxable profit, your taxable income, which would also reduce your PAYE computation at the end of the day. You know, I don't know if that is a bit more structured than that. Mr. Bidemi, you can go ahead.
Okay, so that is that about that, right? Now, for the question, now, if you decide as a company to carry out involuntary contributions of pension on your staff as requested by the staff, then it will reduce the tax liability of the said staff. All right. So, of course, a voluntary contribution, to answer the question in clarity, the voluntary contribution as requested by the staff and as the company decided to carry it out will reduce the tax liability of the staff. All right. Now, where the problem is that the staff making the voluntary contribution will not be allowed over 5 years to make a deduction from that voluntary contribution. If you make a voluntary contribution this month so as to reduce your tax liability, the next month you go back there to remove of course, probably next month or next 2 months or next 3 months, you are disengaged, then you want to make your or you will not even disengage because voluntary contribution can be removed. You can decide to withdraw the money. The place of the law is that if you are removing from your voluntary contribution over minimum of 5 years, as in lesser than 5 years, that money will be taxed. So the only period in which your voluntary contribution will be staying in your pension account and that it will not be taxed is over 5 years. So I think to answer your question, voluntary contribution will reduce your tax liability. So it will, be a relief against your gross income. All right, Mr. Money, can you say something about that?
Okay, you're perfectly correct, sir. You're correct on that. So I hope that answers Mr. Tommy's question, right?
Yes. Yes.
Okay, thank you very much. So I will give room for, is there anyone that has something to say? Maybe a comment or a contribution, a question very quickly. Is there anyone, do you have anything you want to talk about?
Yes, good evening. I just want to point out something. When Mr. Bidemi was talking about the National Housing Fund, he mentioned the fact that
Yeah,
the National Housing Fund is
I saw your
2.5%.
notes. Yeah, I saw
Yes,
your
so
note about the 2.5%, and it is not mandatory. Yes, you are
yes,
right about that. It
no
is not,
mandatory.
it is not mandatory. I think it escaped my mind. Yeah.
Yeah, and it is now 2.5% on the gross salary, not basic salary as it used to be.
No. It is, if in fact, right from time, it is on the gross salary. If you look at the material, it is stated there because the material, all of the material that I shared, they are most recent. I think in all of the material you are seeing is in 2022. All right. So it is on the gross salary. So if the material is written as basic salary, then it is an oversight. All right. So all of the social security contribution, they are on gross salary, all on gross emoluments. All right. I saw the note and I appreciate you for that.
Okay, you're welcome, sir.
Thank you very much, Toyosi. Any other person? Okay, so I want to believe.
Can you share yours? Can you share your LinkedIn to with us, and also this file for the PAYE computation and that of the slide? Thank you very much.
What did you say? Like, he should share his LinkedIn profile, right? Is that what you said?
Yes. I mean, the link is linking the profile, linking link rather, and then
Okay.
also slide as well on the group so that we can have access to it. Thank you very much.
Okay, no problem. Mr.
Right,
Bidemi will do justice to that. So I want to appreciate each and every one of us. First of all, I want to appreciate Mr. Bidemi Aziz for taking out your time to impact us this evening. We do not take this session for granted, and we want to say thank you very much for sharing your knowledge. It has been a great training, and we have all come to the end of this tax September. You know, it has been a wonderful section right from the very beginning down to this moment. And I want to appreciate everyone also for taking out their time to listen to us. We wouldn't have been able to carry out this training without you guys. So you can always reach out to us on different social media platforms. Make sure you connect with Elite Accounting Professionals so that you can get more updates from the Institute on the next training that will be coming up. We'll be having training coming October, this coming month, how to prepare financial statements from the scratch. So we'll be having that training coming up in October. So make sure that you connect with us so that you can get updates on such training. And you can listen to our videos on our YouTube channel. You can listen to previous trainings that we also had on accounting and then some other tax training. So if you have any question, please feel free to reach out to us on WhatsApp. And if you are not on the WhatsApp group page, you can always send me a message so that we can also add you to the community. So thank you very much. This is Elite Accounting Professional Service, a training institute established to empower professionals to equip us with the necessary skills needed to excel on our...
Please, sir, sorry for interruption. We need to have your number. I'm sorry.
Okay, my number. Let me see. Okay, let me drop my number here. You can reach me on this. You can always reach me on that number. So we have more exciting training coming up. And I believe if you stay glued to Elite Accounting Professionals, you will definitely get value and you will increase your skills as a finance and accounting professional. Just like what Mr. Bidemi said, I believe after this training, we can upgrade our CV and then, you know, put payroll skills, payroll management from it. But you need to, if there is anything you don't understand from all what he has said, you can always go back to listen to the video, look at the Excel sheet that he has used to practice, and also you can learn from it and ask questions if need be. So thank you very much, everyone. Thank you for your time. Thank you for joining. We hope to see you in our next training that will be coming up in October. Okay, so we are going to call it a day now. Bye for now, everyone, and have a lovely week. Thank you so much.
Thank you for having me.
Yeah.
Thank you very much, sir. Really appreciate class.
Thank you. You're welcome. Thank you.